One, how is everyone doing? Welcome in to the Micro Moment Trading Investment Show, Unconventional Wisdom, where me and this expert group of panelists, all successful traders, are going to talk this week about dividends and some other things related to those. So I have Joe here with me. Randy teaches our Charting for Momentum covered calls along with Joe. They teach covered calls together, the courses, the workshops. Tim and Deshaun are our micro moment trading teachers. They do are very quick trades in and out. They do a course every morning on that, which I think you guys just finished up this morning. Correct?
Yes. Yeah.
Mm-hmm. Cool. Good day today?
Yeah, we had a good, well, no, this was a very, very slow day, Micah. They only had like 0.5%, but we're up this week 39% through yesterday. And
Nice.
we may have some more trades this afternoon, don't know, but it was really a slow day today. So
yeah. Excellent. Well, thank you guys for being here. I know you guys jump off that webinar a little bit early to come over here. So thank you for everyone. And then all the people that aren't asking Deshaun questions right now, because I know he always stays on and helps people out. So I know we got some extra slides to show today. Tim's going to be helping us out, file share with some things Randy sent to him. So with that, let's get started. Joe, how's everything going down there?
Everything's going good, Mike. Appreciate it. I'm so glad to hear you survived your hurricane last night. Huge. We got an email this morning from Mike, and he said, "My goodness, I don't even know if I'm going to be able to be on here today. Had such a terrible storm." And I'd heard, on the weather reports yesterday that y'all were supposed to have like up to 90-mile-an-hour winds, which is greater than a lot of hurricanes. So it's good. I'm glad you. I'm glad that you made.
I think we ended up with like 330,000 people without power at the end of it. Just Puget Sound Energy, I think. I'm not sure. Seattle Light Systems work on a different network than Puget Sound, but it was most of the area.
And before I get started here on this and get into our dividend for all of you going to participate in that today, I want you to notice Deshaun. Deshaun is not actually praying about this session today. That's his screen is up above on the ceiling, but it looks like he's doing prayers all during the session, And between him doing that and Tim's 50 eyes, so. Yeah, we want to talk about dividend stocks today, and I think later on in the month, Randy's going to be doing even a more expanded version of dividend stocks. We have been doing covered calls for 20 years, and recently in the last couple of years started doing the micro moments as our main daily morning seminars. Dividend stocks have not really had an important position in what we were always doing with covered calls. We just didn't think about them. We didn't have a lot of demand from our clients because they're somewhat expensive, and you got to do some little tricks with them when you're doing covered calls so you don't get put out in the cold. And I'm going to go over, this morning where you find them. Also, some basic things that you need to know. You don't need to become some kind of like genius expert. Like I got some takeout sheets here that have all kinds of stuff. You just don't need to know that much stuff. But dividend stocks have become more popular now for whatever reason. We have clients that have dividend stocks, and they're up against the wall as to how you trade covered calls to increase the yields on those dividend stocks and also reduce what they're costing you because they're expensive. And our technique works perfect for that. And so we'll probably be adding more dividend type information as the months go by. But a dividend stock is obviously a stock that pays a dividend. And I'm going to keep this pretty simple, not try to get too complicated. But you buy the stock, and you know what the dividend yield is based on the price you're buying, what you're paying for the stock, by simply dividing what their dividend is by what you paid for the stock. So everybody's going to have a slightly different dividend rate in their own personal account. Before you buy the stock and want the dividend, you're not going to get the dividend until you bought the stock. And there are certain dates where they establish the dividend payouts, and you have to have bought the stock. So if you go out and you do a call and get called out, and you don't already own the stock, in all likelihood, you're not going to get paid a dividend. So those kind of things you need to check in, make sure you're going to be okay. Also, we've designed the technique to try not where you're not going to get called out. And I'll, Tim and Randy and Deshaun, I'll go over that here in a few minutes. But there are monthly dividends, there's quarterly dividends, and there's even daily dividend stocks. And Randy has some of those for you, give you some clues on where to find all these things. But again, essentially, the yield, your yield is going to be different than everybody else because you're not going to pay the exact to the penny same price that I would pay versus Deshaun would pay. But we're all getting the same dividend. So now dividend stocks can be treacherous if you think that just because it says dividend on it, you're going to go out and buy some wild ass crazy stock, and because it's got a high dividend, you got to really check that thing out, just like you would check out a regular stock that you're just buying the stock to own. Now, this technique is going to be really great for people that already own dividend stocks, and I think we can probably take some examples today as the session goes forward here. Take some of your examples. You've got this dividend stock, you paid this amount of money, and we can instantly show you based on all the charting material and stuff we have in our toolbox and elsewhere, how to immediately start probably increasing your dividend yield 3 to 4 times and constantly reducing the price for your dividend stock all along the way.
Joe, that is also true for positions people currently own, right? There are, to my understanding of what you guys are going to be talking about, there's even more that you can do for just entering a stock position to what you can actually do to maximize the dividend. Is there really any difference, or is it just which one you select for them?
I'm sorry, you mean if I'm sorry, I was daydreaming.
Yeah, of course. So people with existing positions.
Yeah.
Is there anything different they have to do to enter those? I guess you guys would be talking about that.
Well, and we are, Mike, going to be showing them how they already have an existing position. We can show them instantly how they can start producing additional income to compete with that dividend income, and also lowering the cost of what they paid for that stock. So yes, we will be. Even the existing ones will be great. Those would be great. People already have them. So okay. Guess turn over to Randy. Randy's going to show you where to find these things, and we can kind of go from there.
Okay. Hi, everyone. This is Randy. Just to kind of go along with Micah's question as well. But what I'm going to be talking about applies to whether you already own a stock that pays dividends or you want to get a stock that pays dividends. The process of generating monthly income in addition to the dividends is what I'm going to be talking about. And as Joe said, we can generate monthly income with minimal risk of being called out. So if you don't want to ever sell that stock and you just bought it to get the dividends quarter after quarter after quarter, we can teach you a technique that you can generate monthly income, get cash in addition to the dividend every single month, and still continue to hold that stock.
Yeah, let's say one thing, Randy. When you say about being called out, don't anybody think that they're going to involuntarily get called out on one of these and lose money? You're not. It's possible to get called out using our technique, but you're going to make a fortune if you're called out, and you're going to be glad to be called out. But you're not going to get into any situation where you're going to lose money. Go ahead, Randy. I'm sorry.
Yeah, I'm just trying to. Okay, so there's multiple ways of selecting stocks. So lots of people have stocks that they bought a while back, or they were given with the intention of earning the dividend. So there's millions of people that follow a thing called Dogs of the Dow, which is to buy stocks that are on the Dow index that have the highest yielding dividends, and then they just hold those. They hold those with the intention of their capital is invested, and their income is the dividend that they get every year. So every quarter, some cash comes into their account. So there's lots of people that do that. Those are called the Dogs of the Dow. That's one way of selecting a particular position, but lots of people already have positions that pay dividends. You can generate extra income with those stocks and keep those stocks in your account. other people might be looking to invest in positions that pay dividends, that they want to just park their money in the stock market in a particular company and leave it there for a long period of time to generate the income from the dividends. So good lists of those would be called like dividend aristocrats. Joe already gave kind of the warning. There are equities that would pay 12 or 14 or 16% a year dividends. Most people that are in the financial industry will warn you against those, because typically a really high dividend means that their stock price is going down, and that's probably not a good thing. So I'm going to talk basically about three basic categories. I'm going to talk about stocks that you already have, and if you already have a stock that you are owning in order to earn the dividend, type that stock symbol into your the podcast box here, and we'll look at that one and give an analysis that says, hey, can you generate monthly income on that one? And what we're talking about monthly income is being able to sell calls against that stock, and that ends up being termed a covered call. And it's a very conservative process in the stock market, probably the most conservative way of generating extra income. So Joe mentioned the Dow stocks, the dogs of the Dow. You can find a list of the dogs of the Dow by Googling or searching through the internet. Just type in dogs of the Dow. You'll get a plethora of sites that list the top 10 yielding Dow stocks. And that's what that dogs of the Dow really are. It's of the 30 stocks, the 10 that have the highest dividend yield. So right now, at least as of yesterday, Chevron was the highest yielding Dow stock at 5.53% per year cash dividend. And it all goes all the way down to number 10 on the list was Amgen with just under 3% per year dividend. So there's lots of people that invest in those stocks to earn 3% a year, and that's a great amount of cash for them in their opinion. But we can show you how to generate 1% a month on that stock. And so if you select the appropriate equity that is not only a good solid company, but also has a good cycle and trend that are rising, so that you can accumulate extra profits just by having the stock go up as well, and has good options premium, then you can earn the dividend, participate in the increase in the stock price, as well as earn monthly income with the options.
I think, Randy, if I may, I think it's a good next step after our topic last week, which was pros and cons of trading stocks versus options. Because one thing, and I mean, dividends is slightly different than that conversation. I think it shows that the big thing that Joe talks about a lot of the time is that you can treat it like real estate. You can own a house and you can pay for the house and live there. That's fine. Or with a house, you can take out equity loans and HELOCs and do different things and run lines of equity across and rent it out. And there's all these different things you can do, because it as a financial tool is not even a house. It's just an entity. I mean, not even an entity. It's a thing that has a lot of different tools going on. And when we have those positions, I think it's just so cool to see how many different tools there are to really maximize a position above just buying and selling it. Do you think there's actually, Tim, I'm curious your perspective on this because of your position in trading. When you transitioned from just owning positions into trading, what was the culture shift like from just buying and selling stock to starting to use some of these tools that you have access to?
Oh, well, yeah, and that's a great question. And the first thing that comes to mind is it was empowerment. I was empowered to take control of my financial future, which is something that I had been looking for. And I was just amazed using these tools how empowering it was for me to control my own financial destiny. First getting into options, just immediately being able to generate, mass sums of cash very quickly and very easily with one of the highest leveraged instruments known to man. And then having this tool, which I look at as a backstop, and I use both tools. I think it makes a great 1-2 punch. But it was just huge going from this, 3 to 5% return a year into an instrument that allowed me to do 3 to 5% per week or per day, often, was just huge. I had no idea that these tools existed. My financial advisors certainly weren't sharing them with me. And,
Go ahead.
that's it. It was just with a few tools and a little bit of education, how you can dramatically change, or how I dramatically changed my investing and my outlook on my ability to make greater money than my highly paid, underperforming financial advisor was.
Yeah, that's fair. But if you know about everything, maybe they're out of a job.
Right.
Right.
Well, I mean, I've already fired one, and the other one's kind of hanging on by his fingernails.
Well,
See, that's the thing is your financial advisor is not going to teach you for you to be able to manage your money. They don't want you to be able to do that because they want you to pay them to do that. And they don't even want to let you think about how easy it might be to do that and to be able to take care of your own money, because then they're going to be out of a job. So
exactly.
It's up to the individual to go out and get the training. Don't just go out and shoot in the dark in the stock market, which is what most of the people on TV probably tell you to do. But get the training of actually a process that systematically takes you through how to generate your income with your own capital. Nobody cares about your money more than you do.
Yeah.
Not your parents, not your brothers and sisters, and certainly not your financial planners. You're the one that's going to care the most about your money. And so being able to take control of that and manage your own assets for generating of income is just a fantastic thing. It allows you to be free to do what you wish to do when you wish to do it.
Right.
And it's fantastic. It's just so nice to be able to do that.
Yeah, absolutely. And I was under the false belief that, investing or trading or options required vast amounts of education, and it was a secret. Only a few select Harvard grads actually had the secrets, and they wouldn't share it with us. And to find out, with these tools that we leveled the playing field. Actually, we didn't level the playing field. We definitely increased it to our side tremendously. In fact, I have my financial advisor that manages my wife's retirement account asks me 3-4 times a week. So what are you doing? What is this stuff? How are you getting these kind of returns? Right?
That's awesome. We had a comment from Wayne. Is that a symbol you'd like us to look into, Wayne, or?
Yeah, that's Prudential. PRU is Prudential insurance.
Yeah, I didn't see the time that he sent it in. I'm not sure what he was referencing, but if you'd like to look at that, Randy.
We can take a look at that. So just kind of continuing on what Tim had up there to start with was the last year's Dogs of the Dow list. You can generate a Dogs of the Dow list any week that you wish. And so one of the stocks that are currently on this year's Dogs of the Dow is Merck. So and there's a comment by Gary that says, if you're looking at Dogs of the Dow, yes, it's only based on 30 stocks in the Dow. That's not the only stocks that pay dividends. So you also can find lists for dividend aristocrats, for the best dividend stocks to hold for your life. There's all kinds. You can just Google dividends. There's all kinds of people out there giving all kinds of advice and recommendations on what stocks make the best ones.
Randy, let me say one reason I think it's real prudent to use Dogs of the Dow. There's only 30 of them. They're all Dow stocks. They all got fantastic qualifications. They're all good companies. And the point of the dogs of the Dow, the reason they take the 10 highest yielding ones on the first day, like this, I've got the list in front of me, meet the 2021 dogs of the Dow. Now, these are, they only use this list the first day of the trading year, and they have all these returns from the highest to the lowest over those 30 stocks. Now, the theory is over the course of a year, those high yields are going to bid up the prices on those stocks. So the stocks are going to progressively get higher as people, keep buying down, reducing those yields to get that stock because it's still got the highest yield. And by the end of the year, all the winners are the ones that are back down to almost no yield, again, and then it starts all over. And that's how it works. Where it works great if when you're doing these calls against those dividends, those stocks, and we're always going out. You'll see in a minute when Randy starts putting this deal on PRU together. We're going out 4 or 5. We're going out a couple of months and 4 or 5 strikes out of the money. So this allows your stock, but just by the nature of the transaction, it's going to increase in value as time goes by. The trick is to not do a strike that's too low where it'll get out there and get you called out too early. You're still going to make money because you're doing strikes that are substantially higher than what you paid for the stock. And so it's just a beautiful combination of everything. It's just for 20 years, 30 years, the dogs of the Dow stocks did do some good last year, but all the other years they do get higher as the years goes by. So you know that you're going to end up getting rid of this thing, probably a substantial profit. You don't have to get rid of it, but you can. Go ahead. That's all I had.
Okay, good. And that's important. So what I'd say, first, the most important thing to select is a good, solid quality company that's not going to go out of business, that has a good product and a lot of customers. And that's what the Dow stocks. Now, basically, the 30 stocks in the Dow, those companies are probably not going to go out of business tomorrow. So that's critical. If for whatever that you're going to invest your money in, make sure it's a good quality, solid stock. So then for generating monthly income against that, we want to make sure that we have a stock that's in a rising cycle. So if you already own a stock, like Wayne is saying Prudential, okay, it is whatever it is. But we can teach you the process of how to generate monthly income against that stock without having to sell it. And then you'll still earn the dividend along the way. So
what did Gary pay for that Pru? We need to know that. Gary, if you'd let us know what you paid for that Pru.
Yeah, so we'll know if you're going to be increasing your profits on it. But so there, Tim has put up a chart. And I got to throw my screen up here to see what equity that is. Oh, there's Prudential. Yep. Okay, so there's Prudential stock. You can see it's in a great rising cycle, right? A great rising trend right there, and that's fantastic. But we use that chart then to help determine where's a price that is probably not likely to reach in the next month. Because if you want to keep the stock in order to earn the dividend, then you don't want to be called out. And being called out says that somebody has the right to buy your stock. So when you sell a call, you give the right to somebody to buy your stock at that price until the expiration. And so if you set the price that they can buy it at above where it's currently trading and above what you paid for the stock, if you happen to get called out, you have a profit. But we have techniques that we can teach you to keep you from being called out. And we call that TSS for defense. And that's just a name that Joe made up. It doesn't mean anything else to anybody out in the world. But it's a process that says you can keep that stock forever without being called out and still generate that income in addition to your dividiend. And
that means tethered slingshot. That's a Texas term.
That's right. Joe made that name up, so you'd have to Google Joe in order to find out what that is. But we teach you how to do that, and I'll actually be teaching and going through that step by step in our dividend workshop coming up on January 30th. But Gary also kind of asked a question that says, okay, so you're just doing this just in time for the ex-dividend date. No. The ex-dividend date is what the industry terms is if you buy the stock on that day, you don't get the dividend. So you have to own the stock no later than the day before the ex-dividend date in order to qualify for the dividend. So selling a call against a stock has nothing to do with that. So you either have the stock or you don't have the stock before the ex-dividend date to earn the dividend. So for those of you that have stocks that you've been earning dividends on, you're well aware of what all those dates are. For those that don't really know, that's what it is, the ex-dividend date, and that's published on the stock trading platforms. It's published. You can go to the stock's website. You can probably go to Yahoo, find it. There's all kinds of places to find out when is that equity planning on qualifying for the dividend at that ex-dividend date. And they'll also tell you what the dividend is. So if we look at Prudential, we can look at it, and I'll put it up on my chart here too, in my own. But we can see that it's in a good, strong rising cycle. It's just started to turn over just a bit. But we can see that the highest that it's been trading at in the last, well, since March, right? It had a big decline in March, and then it's just been going up, and it hasn't traded above $85 in that length of time. So if we go to the options chain, and the options chain is where the information is housed about all the different options that are available and how much the premium is that you would be able to get. And if we look at the 87.50 call, okay, so it hasn't traded above 85 in since March, since the big, March of last year, since the big, crash from the pandemic. It's not been above 85. If we go to the 87.50 call that expires in February, so that's a month from now, a month from tomorrow, that call will expire. That means that nobody else has any rights against your stock at that time. That 87.50 call is $1.70 per share. So if you have, and you have to have increments of 100 shares of an equity in order to sell a call against it. But you see, you can own the stock. If it goes up in value, you still have the stock. And until it gets to 87.50, you have no obligation. That person is going to pay you, they're renting your stock for $1.70 per share.
What's the stock going for today?
Right now it's at 83.77, Joe. So you see, it's still well below. It hasn't hit 85 in 10 months.
Yeah, that's over a 2% return just by selling that, and it's going to expire in 30 days.
Right, and that's in addition
to the dividend.
And so let's see if I can quickly go out here and check what the dividend is.
And you're going to do that every month. And let's say if it was the same every month, that'd be 12%. And the dividend's probably not, but I don't know, maybe 2 or 3%.
Yeah, I'm going to get it right now. I'm calling it up on my research screen here. That the dividend is $1.10 every quarter. So the last ex-dividend date was November 23rd. So about the end of February will be the next time you qualify for the dividend. That's only $1.10 for every 3 months. Here, by doing the dividend process, you can earn $1.70 every month, in addition to still being able to earn the $1.10 every quarter. And that's like 10 times. That's even more than that. It's like almost 15 or 16 times the amount of income that you're currently generating from your dividend. And so you keep the stock, you sell the call against it at an out of the money. Those are called out of the money strikes. And if you learn our management technique, it'll keep you from ever. What happens if the stock gets to 87.50? We have a step to take to keep you from being called out. If you don't want to be called out. Now, some people, they're fine with buying the stock at 83 and then selling it for 87.50. They'd be happy to do that. in addition to earning $1.70 on top of that, with the potential of earning the dividend as well. Some people would be happy to do that. Others don't want to sell their stock because of tax consequences, or because their grandmother gave it to them and it has sentimental value. For whatever reason, they don't want to sell it, and that's okay. Our process works with you not having to ever sell that stock as well. So Prudential, it's a great covered call to earn monthly income in addition to that dividend, and $1.10 dividend is a pretty good dividend out there in the stock market these days. As Joe said, that was what, like 6% return or so for the year.
A comment from Dirk here says there's even more you can do with them in the form of a dividend reinvestment plan. Do you guys use those personally?
I myself don't do dividend reinvestment because I use the money to do other things. But you certainly, if you like that stock and you want to keep owning more and more shares of it, then you can reinvest the dividends if you don't need it to, pay your bills or live on the cash. If you are young like Micah, and you have a different job or a different way of earning money, and you want to grow your portfolio for retirement, dividend reinvestment is a great thing, because the dividends just automatically go into buying more shares. But the $1.70 a share that you get for selling the call, that's cash that grows in your account. Now you could use that to go buy additional shares if you wish, but otherwise that's cash that you could use to pay your bills, to live on, or just save for retirement. It's just a great extra process to be able to learn to generate income on those on the stocks that you've already decided that you're going to earn, or you're going to own anyway. Oh, there's lots of questions coming up now.
Yeah, Gary says you can do this with you've been answering a couple of them throughout, Randy, just by you talking. I've been watching the comments and then
Okay.
So you've answered some. Gary's wondering if you can do this with leaps as well.
No, now you have to own the stock in order to earn a dividend. Dividends are not paid on options. So you have to own the stock. Not only do you have to own the stock, but you have to already have it in your account before that ex-dividend day, because ex-dividend means, I think it's Latin or whatever, ex means without, right? So the date that's posted when it says this is the ex-dividend date for a stock, that means if you buy the shares on that day or later, you didn't earn that dividend. You'll have to wait till the next quarter to earn that dividend. So it's important that you have to own the shares before the ex-dividend. But if you already own the shares, then it doesn't matter when the ex-dividend date is, you're going to earn that dividend as long as you own that stock. Selling the call, like on Prudential, the next ex-dividend date's not till February. You can sell a call though today and earn income on that stock while you're waiting for the February 23rd ex-dividend day to come around. And you're going to earn the $1.70 a share, plus when February 23rd comes around, you're going to earn the $1.10 dividend as well. And as Joe said, if the stock's not above 87.50 by the third Friday of February, because that's when the option expires, right? You're selling the right to somebody for a set period of time, only for the month. They have no rights after that. So if the stock's not above 87.50 on that third Friday in February, that option expires. You've already got that $1.70 per share cash in your account, and then you sell the March. But you may sell a different one for March depending on where the chart. If the stock went up to $87, then maybe you sell the 90 call for March, and it's going to have an equivalent amount of cash available to sell to get that premium. And you can do that month after month after month after month for as long as you desire to do that. And you're going to earn the dividend, and you're going to earn monthly cash against that with a very conservative trading technique.
Nice. Deshaun, I want to get your opinion on something that I'm kind of noticing, and it's about system. So the common theme throughout, the mindset shift on a lot of things is to stop going after, items and start creating systems, repeatable systems that continually pay you. So this, comes in the form of stopping, a job to maybe people start investing. So they kind of stop the work for time and go into creating a system that continually pays them out. Deshaun, you and I have a lot in common, just like all that we've seen in the workplace and different things. We both bartended for a few years, to my understanding. How has that? What's your take on systems of income, and how has that kind of affected your life?
Okay. Yeah. So thanks for the question, first of all.
Yeah.
I guess really what I noticed, like, cause you said I bartended for, I want to say probably 7 or 8 years or something like that.
Oh, wow.
And, my income grew. I made pretty good income from it over time. But if I wasn't working, I wasn't making money.
Mm-hmm.
I actually really what opened my eyes to like what you say a system was I read this book called The Richest Man in Babylon. And that what was opened my eyes because I actually didn't receive that education from like parents, or obviously school didn't teach me, don't teach you what you really need to know about money. And so once I have my eyes open to, oh, it's better to have my money making money for me because my money will work way harder for me than I can ever work. I happened to meet Joe at the bar. And so I think it was like two, maybe 3 years of bartending for Joe before I even was like, man, what do you do? And then it's Mike's meeting.
Oh, can, Joe, you can, it's in the platform. Just click on the mute button on your stream there. Should be.
Joe meets lots of people at the bar and teaches them about how to generate income.
Yeah.
I know he's muted. Now we can just talk about him.
Yeah.
He can't say anything. He can't defend himself right now. So
yeah.
Marcus might be able to unmute him.
But meeting Joe and talking to him, and I started watching this podcast on Thursdays actually. And so after that, I started doing my research, and I'm like, oh, well, this is big. I actually had, after reading that book, had already started saving money, so I had money ready. All I needed to do was learn how to do this, and this kind of like opened my eyes, and I started telling everybody about it. It's like I guess to answer your question is like going from kind of working, trading your time for money to get to like that investment mindset is like where I went like instantly. And that's just where I am now. So to take back my time, and now I get to, like, I'm at home, my baby's, he was crying in the background, so I had to put him away, but now I can just sit at home and do what I want to do pretty much.
Yeah.
So, yeah.
That's awesome.
see, and that's one of the things. Deshaun spends every day earning some income on the time frame that he desires to do that for a short period of time. It can go all the way to just getting dividends on, or getting income on the dividend stocks that you already have. That takes about 5 minutes a month. So like on that example with Prudential, the $1.70 per share, that's $1,700 of income against 100 shares of stock that takes you 5 minutes to generate.
Mm-hmm.
And you can do that once every month. So there's a wide range of how much time do you want to spend to generate how much income, and all the way from doing it for a few seconds every day to doing it for 5 minutes once a month, and everything in between. There's all kinds of processes that you can learn and that we teach that go that whole gambit of the spectrum.
Mm-hmm.
Joe's
Sorry,
still muted.
I'm working with Joe to try to get his mic on.
Yeah, he's still muted.
I'm gonna see you a picture, Joe.
Joe,
It says his mic is not connected. So Joe, I don't know if there's anything on your end. Is your mic on? Is it connected?
check
Okay.
the plugs.
Oh, not at all. Okay.
My favorite version of Joe, actually. So.
There you go. There you go.
Oh,
Well, hey, but you know what's going to happen to Sean? He's going to learn sign language now, and so he's going to start doing the sign language the whole time if we have him muted.
yeah. Well, I think he knows some sign language that.
Well, yeah, you don't want to show the sign language that he already knows. Yeah.
Yeah. It looks like your mic itself was unplugged, Joe. I'm not sure.
He says it's wireless.
Yeah, these mics, that cord kind of the jack on that kind of breaks off. It might have broken off.
Yeah, I have the same one. My USB cord.
Yeah, I think we all have the same issue with that mic.
Yeah,
I'm going to have to. Those are cool looking mics. I'm going to have to get one of those. Joe,
Yeah,
you
the part that breaks, it's only like $2 online, and then I just took it to like a cell phone shop and had them resolder it on and fix it. Yeah, like $15. So
There you go.
Yeah.
That's the way to do it.
yeah, Joe used to have his he's showing it.
shut down.
Joe used to have his Edward R. Morrow, I think, the old radio broadcaster, that huge old microphone that would sit right in front of you when he was doing his radio podcast. He used to have that. That always looked pretty sophisticated.
I like that. Dirk says, "Get Joe a pad of paper and pen."
Yeah, he'll start writing his notes and he'll be holding them up and saying, look at this.
Well, Joe, next week I have to ask you, because I was excited to ask you where TSS came from. I want to know the origin of the name Tethered Slingshot. So you'll have to tell me about that next week.
Yeah, he just he's shooting it way out in the future is what he's like. There's a question from Audrey. Audrey says, do you have to own at least 100 shares of a stock to do this process? Yeah, to earn a dividend, you only have to have one share of stock. You can have as many different shares as you wish, because the dividend is paid on a per share basis. But to do a covered call, if you're going to sell an option, whether you're doing, no matter what it is, an option is equivalent to 100 shares of the underlying equity. So it's done in groups of 100. So one option contract, you have to have 100 shares. So yeah, you don't have 100 shares of a stock. So that's why, some stocks all the way down to I have one stock, AGNC. It pays a dividend every month, and it's only a $15 stock. So for $1,500, you can own 100 shares and generate a dividend every month. Which is 9% return just on the dividend. And you could still sell an option against that for every month and generate another over 1% return every month just on the option that you would sell. So you don't have to have, millions of dollars to own stocks that pay dividends. Can
y'all hear me?
You could, own Amazon at $3,000 a share and get, I don't know if they're going to pay 1% on dividend, all the way down to, you can get $10, $15 stocks that are still good quality companies that pay dividends too.
Can y'all hear me now?
Yeah, we can.
Oh, unfortunately, yeah, Joe, we can.
Yeah. But the mic thing, the card on it broke, but I finally unmuted myself here. Silly, but anyhow, that tethered slingshot. That means tethered slingshot. You throw that position way out there. It's when you're managing positions. It's going out that nobody will do anything to screw you up while you're out there managing the position. So it's tethered slingshot. You throw it way out because someday you're going to bring it back. That's why we call it a slingshot.
Gotcha.
So,
I meant like what made you think of that? Like what was the inspiration for the name?
Genius.
Stroke of genius.
Exactly. Yeah. No, that's like us we're in the process of moving. So anyhow, the TV cable thing got all messed up. I was trying to get to work one day. Nothing was working at all. And so I really needed a drink over at the grill real bad. And so I told my wife, it was during happy hour, I'm going to go and have a drink and think about this on the way. Well, I had to walk about 2 blocks. And of course, that 2 blocks, I had this epiphany. It came to me what the problem was. And it solved it. I had the 4 drinks and I went back home and slept on it all night. That morning, before it even got light, it was working fine.
There you go.
That's how these positions come up, But yeah, that's that example y'all did. That was exactly huge yield, huge. And he was the worst that could happen to him. He can get called out, and by his own making, he's increased the strike so far above. He makes a huge profit, and then he can go right back in there and buy cheap again. So,
yeah, I mean, to sum up the result I see, especially from Randy, your trading flow is just a ton of little paydays, just constantly, and you just pepper them in there over and over and over again, and you just let all of these. I mean, they're not even individually little returns.
Micah, last week they on the morning sessions back.
Go ahead, Joe.
They make 199% for the week. 199%.
I was talking about Randy's with how he pulls out a little bit from the call and then pulls it back from the TSS and then pulls it from the dividend and then pulls it from the return on the stock and then pulls it from the momentum trade, and just it's incredible.
Yeah,
but
well, he's doing some options.
Yeah, Randy makes incredible returns every week. Huge.
That's awesome. A good point from Dirk, and then it compounds.
Yeah.
The what?
That's the
compounding.
Nail in the coffin.
You get to use the same money over and over and over again. That's Joe's compadre, Albert Einstein. He said that compounding was the eighth wonder of the world. You really increase your portfolio by using the same money over and over and over again to generate income.
Yeah, Frankenstein. Einstein and I were contemporaries. That's right. Yeah. But here's the deal. That example I give, because we're almost out of time here. The example, $2,000 in a trading account, and if you just listen to these guys, Tim and Deshaun in the morning, if you just make 6% a week, 6% a week for 2 years, 24-month trading month. Okay, 2 years, 6% a week. At the end of that period, you're going to compound into $850,000, and then you could pull out $40,000 a week as sort of salary, and leave the other $40,000 for 3 more weeks in there. Compounding is incredibly powerful. And that's 6% a week. They make that two or three times that amount in a day.
Yep, that's awesome. Yeah. Thank you all for being here so much. One thing I do want to mention. Master of the base hits, Kathy says. One thing I would like to mention is we do have a coupon code for the upcoming dividend workshop. It is on January 30th. Randy and Joe will be going more in depth to exactly how to do it. They're going to be helping people directly with their questions. We have a live question box on that day. That you can ask anything you need to, and then we will. And that is a 1-day workshop this time, correct? Yeah, so that's 1 day. Yeah, Randy, anything specifically that you guys are going to focus on that day?
Well, what we're going to focus on is talking about what is a covered call, what is a dividend stock, how that process works, and then how to select and how to construct the covered call against it to where you earn the dividend income as well as the covered call income on a month-by-month basis, and go through the process that what happens if for some reason the stock goes up to your price that you don't want to sell at. What do you do to keep from having to sell it and continue to generate additional income and continue to get the dividend? I'm going to go through all of those step by step by step by step and show multiple examples, answer everybody's questions, look at any stock that somebody has that they've had for a while that they get a dividend on, and then how to generate that income using their stock as well. So we'll go through that for that day on January 30th. It's a great opportunity for you to be able to come and learn how to generate your own income on your own stocks.
Yep. Oh, Gary was asking when it is. Yep, January 30th of this year.
And I think it starts at 9 o'clock Central Time in the morning.
9
And,
a.m. Central.
it's via the web, so you don't have to, you can do it from wherever that you wish to do it from.
Yep. Yeah. So we have a coupon code for that. Now is PCW 221. PCW 221. We haven't posted this anywhere or anything. We thought we would. Marcus, if you could verify, I have PCW. C is in cookie. So if you could check. Yeah, PCW 221. We have not posted that yet. We thought we'd give an exclusive. That's for 40% off of the upcoming event.
Wow.
Pretty substantial there. Thank you. Yeah, that's perfect. So if you guys would like to know directly how to do that in your account, and then once you get into your account, all the different platforms, we can help walk you through that process. Yes, so we have that code up now, Dirk, as well. Awesome. So I want to thank everybody for being here. Tim, Randy, Deshaun, and Joe. That was a really good topic, and I think it piggybacked really well off of last week's. Any points that you guys? Any closing points that you were?
Nope.
We
hope you get all recovered up there. So.
I do too. We are. I think we're about halfway back up. So maybe more by now. I guess they did a lot of work in the night. Yeah, it was at like 3:30 a.m. The lights kicked back on and turned the heater on, and I heard it back into this dimension. All right.
Yep.
All righty, guys. Thank you so much for being here. We will see you next week.
Everybody have a great weekend.
Yeah, likewise.
Yep.
We'll be streaming live on Facebook and YouTube on Thursday next week, 10 a.m. Central. And we'll be releasing the topic. I don't have the topic currently, so you can find that on our Micro Moment Trading Facebook and LinkedIn pages. And that you can just type in Micro Moment Trading to the search bar. Same thing with our Instagram. We do have links in our channel bio if you would like to go that direction as well. Twitter, anything that any platform that works best for you, we can get you the content you need on that platform. So thank you for being here. Write down that coupon code just in case, and we will see you guys next week. Thank you so much.
Later.